morning, hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day as always with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed towards the end of the show by our experts. But before we introduce our guests for the day, let's see what the global handover looks like. European markets closed higher after the European Central Bank announced a 75 basis point interest rate hike. Stoxx 600 ended the day up 0.5%. All other major bourses also ended firmly in the green. Wall Street looks set to snap a 3-week losing streak. All the three indices managed to shut shop with gains as investors digest Fed Chair Powell's comments on rate hikes. Asia too in fine fettle this morning and the SGX hints at a start above 17,900 for the Nifty. Meanwhile, oil remains near 8-month lows. Stellar upmove seen in the markets yesterday. Will the trajectory continue? Stocks in the spotlight today will be Century Enka, PNC Infratech, Kaveri Seed and Hatsun Agro. All right, we're now joined by Siddharth Bhamre of Religare Broking. Let's talk about the big trends playing out in the market. Hi, Siddharth. Great to have you on board.
Good morning, Karunya. It's a pleasure to be on your show.
Morning, and likewise, I'm glad you could take time out. But let's talk about what's happening in the market. We look to be in a very sweet spot right now. The markets are looking fairly resilient. But are the valuations as attractive as they were a few weeks ago?
No, obviously they are not very attractive, but the important point is we are in a spot where we can command this valuation premium. See, you have to look equity on relative basis, and when I'm talking about relative basis, I'm comparing our markets with what's going around. I think the biggest competitor for fund flows is China. I think we all have spoken much about it, how there is a slowdown in COVID-related lockdowns. Bust in real estate markets over there. And we are not talking about great growth rate in China. So there, there is good chances that we might get incremental flows. Europe is going through tremendous problem because of hike in energy prices, which is leading to inflation. So even if DCB has raised interest rate by 75 bips, that's not going to solve a problem which is supply-led. At the same time, US is dealing with its own problem, though I strongly believe that seeing growth numbers for 1 or 2 quarters and saying that US would get into recession may not be a right way to look at it. Just the way we see growth versus inflation is the trade-off for us. For US, it's job data versus inflation. And job data is not bad. In fact, it's quite encouraging. So I'm not very negative from US market per se. But overall, look, the problem we have. We have a problem of are we going to grow at 7.2% or 6.9%? I think in larger scheme of things, this is a very small problem to deal with. And that's the reason, despite all this noise, negative noise around us, we are near to all-time high. 4-5% away is not a big deal. So if you have so much of clarity, so much of visibility, I think we should not then see valuation metrics and compare what it was probably pre-pandemic and we are expensive. Yes, we will be expensive. Just like you have revenue visibility, growth visibility in FMCG, and that's the reason the FMCG sector commands a high valuation. Similarly, in today's market scenario, there is visibility of growth in India. And if we are tad bit expensive, I think we should not be too much worried about.
Right. But as you said, we could see an upside of another, 4-5% from these levels. What will be the big triggers that could pull us up further, and how soon can we make a fresh high according to you?
So I think triggers are already there. Whatever I mentioned in my previous comment, those themselves are triggered that because world is not in a better shape and we are doing well, we could move higher. Now, what can take us higher? That would be a question to answer, Karunya. And I believe, though banking does have a lot of weightage, but if you look at what has happened since March lows till now, banking has kind of underperformed. Yes, last 1 month has been good for banking. What I'm trying to establish here is that only because last 1 month has been good for banking doesn't mean that banking will, now stop and maybe something else will start doing well. there is a huge underperformance by banking sector in last 1.5 to 2 years. Now it has started a catching up role, and at the same time, valuation wise, we have seen IT was expensive. Some of the large conglomerates have been quite expensive, but banking is not very expensive. There are quality names which are still available at decent valuation. I won't say attractive, but there is no froth in banking at this point of time. With balance sheet clean, credit offtake going up, or at least poised to go up, because even RBI mentioned that at 75% capacity utilization economy is, we might see private capex going up, which would lead to credit offtake. NPA levels are under decent. They are at decent levels. So this sector is poised for strong growth. So one has to be overweight banking, and the other space which I would say would pull this market higher, though it doesn't carry much of weightage, is auto. So these two spaces are on the forefront, and I really don't know how much time we would take, but in current context, I think we should not take much time to reach new all-time highs.
Well, that's heartening to know. But Siddharth, we often get a lot of questions about IT space, especially the heavyweight blue chip names. And they have corrected a fair bit, and they've remained largely very, very sluggish of late. Talk to us about what could make IT attractive again, and how soon.
Okay, so see, look at we again need to see what has transpired in IT because of COVID. The digitalization set in, and there was a huge demand for IT. And I'm not just talking from job markets perspective, but I'm also talking from equity market perspective. People went overweight in IT because again there was visibility, and stocks which used to command PE of say 20 to 25 were given PE of 30, 35 plus. And I'm talking about all the frontline names. TCS being the most valued company and also most expensive, and it deserved that premium. Now, in this process, what happened that IT margins got squeezed. They wanted to maintain their market share, grow their top line, and the focus was more on the top line and not on the margins. And in this process, and I think Karunya, we all have seen that how wage structure has changed in IT in last 1.5 to 2 years. Now with some slowdown talks in US, wage structure not very optimal for IT, we are seeing margin pressure, and growth prospects are also not very great as such. So there is possibility of further correction in IT. More 5 to 10% correction. I think these stocks would come down at a P multiple of 20 to 25. HCL Tech being the cheapest, TCS being the most expensive. If HCL Tech is available at say 17 to 18 P, I think it's going to be a good buy. TCS around 25 P is going to be a good buy. And I believe 5 to 10% correction in IT space will make it more attractive. I don't know whether immediately they would start moving up or not after 5-10% correction, but that is the level where the interest would come back again. We are not having any exposure in IT. We are not strongly suggesting it from a medium-term perspective. Long-term, everything is buy, Karunya, you know that. But then 5 to 10% correction from here, I think these stocks would again start attracting investors and traders' attention.
All right, noted. Siddharth, thank you so much once again for joining us this morning and sharing your observations of the big market trends that are playing out as we speak. Okay, let's get on with some technicals of the market. We have Gautam Shah joining us from Goldilocks Premium Research. Morning, Gautam. Great to have you on board. Let's talk about the cues, the trade setup, and SGX pointing to 17,900, actually above those levels quite firmly so. Are we ready for a ride up and away in the run-up to Diwali, perhaps?
Good morning, Karunya. Well, India happens to be the flag bearer in the global equity basket, and I think this has been the case for the last 6 to 8 weeks. I think we have been running hard. We have already been riding, so it doesn't make a difference whether the Nifty moves up a few percentage points from here or not, because I think it's all about stocks. In the last 10 days, while the Nifty has been in this range, if you see many of the sectoral indices and many of the themes, they have been making a higher high every day. despite the fact that 3 or 4 times you had a gap down start of about 200 to 300 points. So this is something that India has not seen for many, many years. It's good that it's become a very stock-specific market. And as you rightly said, we are very resilient to global factors. And I think this is going to continue because this looks like a trend. It's just a formality for the Nifty to really break out. We have been working with that 17,800, 850 area. I guess we will cross that today on a closing basis. And once that happens, we are probably looking at 18,100 and eventually 18,600. So yes, Nifty trajectory is up. There are no signs of topping out. It will continue to do well. But I think concentrate on stocks and sectors. I think that will give you far greater returns from here.
All right. Okay, then we'll see, what happens next. But let's talk about some stock-specific action as well, especially mid-cap. A lot of stocks which have interesting news flow that could keep them buzzing away in trade. The first one I want to flag off is Century Enka. LIC has cut slightly over 2% stake in the company, and now their holding in Century is down to 3.5% versus 5.5%. But if we look at the technicals, what do they tell us about Century and which way do you think the stock is headed?
I think the stock is headed higher, so I don't have a detailed view on it. But I think like many other mid-cap stocks in the market, it went through a ugly-looking bear market for about 8 to 9 months, and it's come back really well in the last 6 to 8 weeks. And it seems as if this is going to continue. So a move towards 500, 510 looks quite likely. Not a recommendation, just an observation. And I think it will definitely find support around 430, 435 levels. So we would be quite positive on Century Enka.
If we talk about comeback, one stock which has failed to keep up with the market momentum is Kaveri Seed Company. There's some update here in terms of fund action as well. MIT and 238 Plan Associate, they've bought about 0.1% stake in the company. This is something that was reported to the bourses last evening. But talking about, purely the way the stock has been, sliding one way single-handedly last 6-7 months, has it finally made a bottom or do you see more pain?
Well, as it goes, you don't catch a falling knife and you also don't catch stocks or trade into stocks which are underperforming. We at Goldilocks use a lot of ratio charts wherein we compare the particular stock with the index. And if you draw a ratio chart for Kaveri Seeds, what you'll notice is that it's in a mega bear market. So I think there are so many better opportunities in the market. Why focus on a Kaveri Seeds? I think when the time comes, when the reversal happens, we will look at it. At this point, it's a complete avoid.
Okay. All right. There's more fund action news coming in from the broader markets, Gautam. Hatsun Agro, SBI Mutual Fund has picked up about 0.7% stake, and now they stand to hold 5.6% overall, share of the company. Talk to us about Hatsun Agro. It is clearly off its recent highs, but still holding on to that 1,000 levels very firmly. Can they build on this, or do you see some, consolidation or some sluggishness in this on these levels?
See, in the last 8 weeks, there's been a lot of rotation. So something that started off really well when the Nifty was at 15,400, 15,500, took a bit of a breather and other stocks started to do well. And in fact, in the last 5 to 10 days, what we've noticed is that many of the underperformers have come back. But a stock like Hatsun, had already done very well, in the last couple of months. So I think it's just a normal pullback. I think the downside is limited. It will get bought into at lower levels. This theme is very, very hot, and I think it is here to stay. So I would be positive. I think with my limited understanding of fundamentals, I'm hearing good things about the stock as well. So I think it's on track for greater upside. Okay, then.
Moving on to stock number 4, PNC Infratech. They've inked a concession agreement for an HAM project with the National Highways Authority of India. For a bid project cost of close to 1,500 crore rupees, and this will be constructed in the next 24 months once the approvals are in place. PNC trading at its 6-month high, just under that 300 rupees levels. Do you think it could surpass that and perhaps continue its upward trajectory from there on?
I think the stock can do wonders. Disclosure that, we recommended it to our subscribers some time back. We like the story. We like the medium-term, long-term setup. I think this entire infra theme is very, very strong. If you look at the NSE Infra Index, it's at a multi-month high. PNC Infra had a fabulous 2021. Then it went through a correction in line with the overall market and has now come back very well, and it's steadied itself in the last 5 to 10 days. So I think it's ready to move up big at any point of time. And honestly, I wouldn't be surprised if a 30 to 40% kind of a move plays out over the next 3 to 6 months.
Okay, all right. Thanks for flagging off, the way forward for all these stocks which are buzzing, which could be buzzing today on the back of news development. But let's also get in some viewer comments and queries as well. There's a question which is posted by David. He wants a short-term view on Tata Consumer products. Again, this one is also at a multi-month high level. Talk to us about the way forward here.
Yeah, we actually like Tata Consumer. I think the stock has done quite well. Last week, we saw a bit of a breakout. It was very small on the short-term chart, so I think it's just a trade. I don't think there is serious money to be made from a medium-term, long-term perspective, because I think a lot of the positives are already in the price. And I think the risk-reward is not the best. But I think if you were to take say a 5% risk from current levels, there is a possibility of the stock gradually moving back to 900. So short term, we are positive, and this entire, tea, coffee, FMCG basket, I think has been very, very strong. So we like it, but purely short term.
Okay, well, I hope it serves your purpose, because I think, David, you've also been asking us about short term as well. Moving on from short term to long term view, we have a question from Siddhartha, and he wants your long term view on M&M. This stock has not stopped its up move, and it's been almost a year and it's still trading at a fresh 52-week high level. Talk to us about what happens next.
Well, it's amazing how things change at the marketplace, because 6 months back, the commentary was this stock does not move. It was in a range for like many, many years, while so many other stocks in the sector did well. And then that snap out happened. And once that snap out happened, it just changed the game completely. I still don't know what's such a big change in fundamentals, but I think chartically, clearly, there are a lot of positive triggers. The stock has led the auto index in the recent past, and this is going to continue. So if you're a long-term investor, stay invested. If you're looking to buy fresh, current levels might not be the best prices. I think if you get that dip, any 5, 7, 10% kind of a big dip, look to add on. I think the area around 1200, 1220 is now a base. So anything close to that, I think it's a very good buy. And as I said, over the next 6 to 12 months, it could easily give you another 20, 25% upside from here. Okay,
then. Next query, let's bring on board. This is from Tanvi Jain. What can we expect from IRCTC is the question she has posted. It has seen a steady sort of gains coming in from its June lows, but still significantly off its 52-week high. So at about 700 odd levels, what do you recommend an investor?
See, I think it's lost its mojo. Many of these stocks which were such star performers in the last couple of years just suddenly lost track. And I think you might have noticed this trend wherein all the big winners of 2021, or rather early 2021, haven't really participated so well in the last 8 weeks. And I think case in point being IRCTC. So I'm not a big fan. I think I like the unlock trade, which has been unraveling for the last many, many months. And Indian Hotels has been my favorite pick. I've spoken about it on every single platform. But IRCTC, the fact that it's underperformed this entire 8-week period, I think is a red flag. So I don't want to chase underperformers in this market. If you're a long-term investor with a 3 to 5 year horizon, yes, it's a good buy even at these prices. But if you're looking to chase momentum and it's short to medium term, stay away.
Okay. All right then. Moving on, what is your view on Info Edge? We've been getting a few questions off late this week on this particular counter. Talk to us about what do you think is happening here on the technicals?
See, I think Info Edge and many other IT and IT related stocks could be bottoming out. There are these initial feelers on the charts that the fall is a little overdone, this underperformance is overdone, and the downside from current levels is very, very limited. At the same time, just because they are close to support levels, the risk reward is excellent. If you were to make a commitment at these prices, your risk is about 5 to 7%. And if the trade works out, it could deliver anywhere between 20 to 30%. That's the way I look at Info Edge, and that's the way I look at the entire IT basket. So again, if you have a 12-month horizon, this might be a good time to be that contrarian and go ahead, buy some of these stocks. Fundamentally, they are excellent. Earnings trajectory has been super strong, and the charts are not too bad. But if you're looking at short-term returns, please stay away.
Okay. Next query then, let's bring on board. This is from Praveen. He wants your view on SBI. For a very long time, most analysts, whether fundamental or technical, have been rather optimistic about this one. But is the optimism still intact?
Karunya, sometimes optimism comes from stock prices movements, because people have been very optimistic about SDFC Bank as well, but then it's been a stock which has been such a big underperformer in the last 6 to 12 months. So I think, again, because we follow relative strength charts, our two favorites in the banking space has been SBI and ICICI Bank. Both of these stocks have recovered so well with the market. Both of them are near lifetime highs, and I think they're going to do bigger things. Now, if you look at the NSE PSU banking index, that's also trading at a lifetime high. So I think there is a big theme in play. It's not just SBI, it's Canara Bank and BOB that's also doing well. So if you have it in your portfolio, please do not get out cheaply. I think it's a great proxy to the Indian banking story, and there is a lot more upside. If you're looking to buy fresh, again, on dips, because you don't want to make serious commitments at lifetime highs and it's slightly overbought. But there are some other banking stocks, maybe a Kotak, maybe an SDFC Bank, which are all trading at support levels where the opportunity could be better.
Okay. All right. The next query is from Rajesh. He wants a long-term sort of view or recommendation on Jubilant Foods. Now, this one also has seen a steady up move from its lows that it made of, sub 500 levels back in May. Right now, I think trading just above that 600 mark. But do you think it has legs to build on to this build on from these levels?
Well, actually, I'm quite surprised with the underperformance. A stock which did so well and was touted as the next big thing for the next 2, 3, 5 years. And obviously, it's a brand that we all relish and, we use in our daily lives. But if you look at the stock price itself, I think it's lost 50% from the highs and it's still languishing. So I'm a little surprised with this underperformance, and that's the reason if you have to really play the unlock QSR, this entire consumption theme, I would be looking at other names. But at 600, I just feel there is nothing to lose in Jubilant Foods. So if you want to make a medium-term, long-term commitment, these might be good prices. But short-term, unfortunately, there are still no triggers because the stock keeps trying to do well, but then finds selling pressure at high levels. And in terms of technical levels, till it does not get past 625 on a closing basis, I don't see strength coming in for the short term.
Okay. The next query is on Bharat Gas. Pradeep Kumar wants your view on this. Many of these PSU stocks have performed of late quite well, especially defense companies and ancillary players. Now, talk to us about Bharat Gas and how do you think it's sort of poised on the charts and which way is it headed? Because it's I think $8-9 off from its 52-week high.
Unfortunately, I don't have the chart in my mind, so I don't have a detailed view. But I think the entire basket of PSU stocks have done very well. In fact, last time when we were on your show, I think a month back, I spoke about how this entire PSU theme is likely to do exceedingly well over the next 6 to 12 months. And despite a weak market environment or volatile market environment, everything's done well in the PSU basket. Whether it's a BEL, HAL, Coal India, NTPC, Power Grid, all superb setups. So I think stay with the theme. As I said, I don't have fresh levels in mind, but I think that the theme is here to stay, and therefore a stock like Bharat Gears could also be a beneficiary. So stay invested. And some of the other names that are highlighted, I think Coal India and NTPC are our favorites. So every small dip, be a buyer. I think it can do very well over the next 12 months.
Okay. All right. Okay. My bad. Bharat Gas actually is not a PSU. I was looking at Bharat Dynamics, but I stand corrected here. Moving on, let's address the last query of the day then. We're running out of time, so really quickly then, Anish Jha wants your view on DCB Bank. You were talking about private sector lenders, a Kotak and the likes, but how are these relatively smaller lenders looking, DCB being the case in point?
I like to stick to stock quality right now, Karunya. I think that's the kind of market it is because they are the ones that are getting rewarded. I think the good thing about the last 8 weeks is that it's just grade A and grade B that has done well. It's not, the rally hasn't trickled down to grade C and grade D. I'm not saying that DCB Bank falls in that category. All I'm trying to say is that stay with the outperformers, stay with the big names, stay with the winners. We live in a dynamic world. Anything can happen at any point of time. Any correction, and the entire texture of the market looks very, very different. So while in the short term, I think the stock can do well, I'm still looking at some of the other names in the market led by Federal Bank, if you want a slightly smaller name.
Okay, so Federal looks better vis-a-vis a DCB. Gautam, thank you so much. On that note, we're going to wrap up today's conversation. It's always a pleasure to have you on board and get in your insights on a host of stocks and the overall flavor of the market. With that, we're going to wrap it up right here on Morning Trade. Thank you for tuning in.